Hello and welcome to Upstack America's Oracle EBS Financials Functional Training. My name is Bob and I'm the lead senior consultant for Upstack America. And with me today I have Victor, who is also a senior consultant. And today we are handling lesson 17 of the receivables module. And Victor, please walk us through.
Thank you, Bob, for the introduction and welcome everybody to this lesson in our Financials Functional Training series. We are going to look at how to assign accounting rules to memo lines. We're also going to talk about auto accounting for when we use transactions that have invoicing rules. And we're also going to enter a transaction to test out the accounting rules, auto accounting that we are going to set up. So let's start with this first one, assigning accounting rules to memo lines. So let's remind ourselves what accounting rules do. The accounting rules, they determine the period type. They also determine the number of periods, and they also determine the percentage of revenue for each period in our revenue recognition schedule. So why would we attach accounting rules to the memo line? Remember, we create memo lines for when we do not, we are not using the items that you define in your inventory organization. Okay, so when you have items that are not, goods or services that you're selling that are not inventory items, you can define standard memo lines for those items instead, such as what we did with consulting services. Okay, and we attach a revenue account for when we sell those consulting services. So those memo lines will have an account, a revenue account associated with them. Okay, and since accounting rules are for revenue recognition scheduling, so we attach the accounting rule to the standard memo line. And in the case whereby we enter a transaction which uses invoicing rules, and we select that particular memo line, then the accounting rule will be defaulted. Remember, we associate the accounting rules to the transaction lines, while we attach the invoicing rules, or we select the invoicing rule at the transaction header. So with that, we can go ahead and assign the accounting rule to our memo line. This is the navigation we are going to follow. So I'll log in as my receivables responsibility, and I'll go to setup transactions memo lines. So let me query some of the memo lines that we have created here. Or let me query everything. There shouldn't be too many. So we have this one, Mascani Developers Operating Unit Consulting Services, and this is for consulting services revenue. So we select this, and this is the revenue account that will be used. So what do we want to do? We want that when we use this memo line in an invoice that has invoicing rules, remember we have to attach accounting rules to invoices that have invoicing rules. So we want to default a standard memo line as an accounting rule for this particular standard memo line. And the way we do that is we come to this field and we look for the rule that we want. So let's use the fixed rule that we created, which was 6 months equal for Maskani. We also have a field for the invoicing rule. This will apply for invoices that you import to receivables through auto invoice rather than the ones you enter manually. Remember, invoicing rule is attached at the header level, so it doesn't make sense to attach an invoicing rule to the standard memo line, which will be used at the transaction lines level. So the field does exist here, but this would normally be useful in the case whereby you're importing the invoices instead of entering them manually through the transactions window. So we have attached this standard this accounting rule to the memo line. We can also attach it to the other memo line that we have for site clearing, but we won't do that for now. We're just going to use this single memo line for our demonstration. So that's good. So now if we go and enter a transaction and one of the lines uses that a transaction with invoicing rules, and we select that particular memo line, the accounting rule will be automatically associated with that line. So we are going to do that, but first, let's talk about auto accounting. We are going to now test out everything all together. So what is auto accounting? We have already covered this. Auto accounting, it helps to determine the GL accounts for the transactions which you enter manually or those which you import using auto invoice. When you enter a transaction, we have talked about the accounting that will be created. It means that you're billing a customer, so the customer owes you, so you'll debit your receivables. You will credit your revenue if it's a standard invoice. By standard, I mean the ones that affect regular invoice that affects a single period. If we have an invoice that affects revenue in multiple periods, which means it uses invoicing rules, then other accounts come into play, such as the unbilled revenue, unbilled receivables, and unearned revenue. Okay. So you can use auto accounting to determine the GL accounts, the combinations to be used in the distributions for these lines when you enter the transactions, instead of going to the distribution window and entering the accounts manually. So auto accounting will have those distributions entered for you depending on the rules that you define. Okay. So you have already seen this. Auto accounting rules can utilize any of these features here, such as the transaction type, the items for when you're using items in, let's say, inventory organization or for order management. You can use standard memo lines whereby you associate a revenue account to the standard memo line such that when you use that standard memo line, the distribution is automatically picked from that memo line. We also have another one, the bill to site. If we go to the sites or the addresses that we create for our accounts, you can see a place where we can enter the accounts, any of these accounts, receivables, revenue, unbilled, and unearned revenue for a particular customer. So what happens is that you go to your auto accounting rules and you tell receivables that for this particular type of account, let's say receivables, I want you to draw the combination from this place, which could be a transaction type, item, or an item, or standard memo line, or bill to site. We also know that we can specify for each segment in the combination to be drawn from a particular place. So you can have your transaction type giving you the company segment, and you can have, let's say, your standard memo line giving you the revenue segment for your revenue account. So this is just a recap. Basically, we have already seen auto accounting in play. The reason why we are doing this is because at the moment this is our current setup. Okay. We have said that when we enter a transaction, we've been entering regular transactions up to this point without the invoicing rules. So we said when we enter a transaction, we want Oracle to get the receivables account from the transaction type. So remember, we had a transaction type, and we went to that transaction type and we specified the receivables account. On the other hand, we want, for the revenue line, we want receivables to draw the account from what we have indicated in the standard memo line. Okay, so this is what this represents. The red is transaction type, the green is memo line. And in our current setup, we are getting the values for each segment from that single place. So for every value in the receivables account, everything is coming from the transaction type. The same way for the revenue lines, every value for the segments is also coming from the standard memo line. So what do we want to do at the moment, and why are we doing it? We are doing it because we now want to enter transactions which affect revenue in multiple periods, i.e. transactions with invoicing rules. And we know that when we enter such kind of transactions, other accounts come into play, particularly the unbilled receivables for billing in arrears and unearned revenue for billing in advance. So we have seen that when we're entering this kind of transactions, receivables doesn't know where to get the distribution account for unbilled receivables or unearned revenue, because we don't have auto accounting set up for them. So that's what we want to do, such that when now we enter our transactions with invoicing rules, we no longer have to go to enter the distributions for these two accounts manually. Auto accounting will do that for us. Now the setup will also have a few changes. So let's start with receivables. Receivables will stay the same. We want, when we enter a transaction, we want because for the transaction you'll enter transaction source and transaction type. Okay. So we want for our transactions, the receivables account will be drawn from the transaction type that we are using. So that remains the same. But what about the consulting services and site clearing services, which are basically the revenue accounts? Okay. For our current setup, the whole thing is the whole combination is being obtained from what we specified under the standard memo line. So from the company to the natural account to the division and all other segments. But now what we want to do, we want to set this up such that the company segment comes from the transaction type. So that's why you see the company segment is in red. Okay. But then the rest of the values for the remaining segments come from the standard memo line. So why does this make more sense? So in order to understand this, let's perhaps visit the transaction type window where we set up transaction types. So we go to set up transactions, transaction types. Let me query the one we created. Which is Maskani developers, Maskani project invoices. Okay. So what are some of the things that we associate with a transaction type? Of course, the operating unit, which is all determined by the responsibility you're using. The other thing is legal entity. So what does this mean? It means that this operating unit can serve more than one legal entity, right? And we've talked about this. And in receivables, transaction types is one of the features whereby that lets us separate transactions by legal entity. So here I can say that this particular transaction type is for Maskani Property Managers legal entity, which is the other legal entity that accounts for itself in our ledger, right? So in a production environment, we can imagine a scenario whereby when you enter transaction type, you will have one transaction type for each legal entity, if that operating unit is serving more than one legal entity. Okay, so we can go ahead and create another transaction type, for example, for Maskani Property Managers legal entity, still being served by Maskani Developers operating unit. For that type, we can come and specify the accounts. Okay. So when you enter transactions with that particular transaction type, then the accounts that will be defaulted by you will be defaulted by receivables based on the transaction type, then will contain the balancing segment value for the other legal entity. So you would use 002, right? Now in our case, of course, we are using one operating unit to one legal entity. So there's really not much of a problem. But in the case whereby you are serving two legal entities with one operating unit, then you would have a transaction type for each legal entity. Okay, so let's go back to our slides. So that's why we want the balancing segment value, the company value here, which represents the legal entity, okay, to come from the transaction type. The way we have it set up here, for example, if this operating unit was serving two legal entities, then you have, and we have one transaction type, then you would have to go and create standard memo lines for company 1 and company 2, right? Because this is the whole combination is coming from the standard memo line. So if you want this to be 002 instead of 001, then you would have to go and create another standard memo line and associate with it the other combination that has 002, which doesn't really make sense. You have two standard memo lines, both saying consulting services. But with this second setup here, we can use a single standard memo line, okay, because the description is the same, it's consulting services. But if the balancing segment value here is coming from the transaction type, then depending on the transaction type we select, the combination will have the appropriate balancing segment value. If that transaction type is associated with Maskani developers, then this here will be 001. If that transaction is associated, that transaction type is for Maskani property managers, then this here will be 002. However, since the natural account is coming from the standard memo line, then when you select the standard memo line, the rest of the values for the combination will be drawn from the standard memo line. So that's our setup for the revenue accounts. The other reason is when you're entering the accounts for the source for the auto accounting for unbilled receivables, Oracle will force you such that the balancing segment value for your revenue account is the same as the balancing segment value for unbilled receivables in the case of bill in arrears or unearned revenue. Okay? Why is that? Because we want to make sure that the balancing segment value remains the same. Okay? So remember, it's a single legal entity that's entering into this transaction with a customer. Okay, so Maskani Developers is the one that's entering into this transaction with a customer. So this revenue is being earned by Maskani Developers. So when we debit unbilled receivables, we also want to make sure that whatever we are crediting is also for Maskani Developers. Now, if we keep this, the source of this as the standard memo line, then we will be forced also to have this source here for the balancing segment value for the unbilled receivables or unearned revenue to come from the standard memo line 2. The logic is that it is preventing you from having different values in this segment. Okay, so if this value is coming from transaction type, this value is coming from standard memo line, there's a possibility that those are two different values. So to avoid the situation whereby the balancing segment value is not the same and we want it to be the same, so that is why we want this balancing segment value for the account combination in the revenue lines to come from the transaction type, the same way the unbilled receivables and unearned revenue will also come from the transaction type. Okay, so I know maybe that's a lot to process by just talking about it. So hopefully when we do the setup, it will become clearer. Okay. So now what we want to do, first we have to go to the transaction type, and we'll go there and say that we want, when we enter a transaction with invoicing rules, we want receivables to read the either unbilled receivables or unearned revenue account from the transaction type. So we have to have an account specified at the transaction type, so that when we go to the accounting rule and we enter transaction type, when receivables goes there to check, it will find a value. Okay. So let's go to the transaction type window, which is actually where we still are. So what we are saying is that we have the receivables account set here. So in this case, we want the whole combination to be read from here. Okay. What about revenue account? We want, for the revenue account, we just want the balancing segment value to be read from the transaction type. That's why this is in red for transaction type. So in this window, we are going to enter a full combination, as you can see. Here I can enter any revenue account. I can enter any account here. Okay, so let me just enter a revenue account. Let's say sales and revenue. And default values for everything else. I really don't care about these other values. I'm only concerned about the company segment, because that is what is going to be read from the transaction type. So when we enter the transaction, Oracle will come and check here and see that the revenue account is this, but it will only be interested in this first value, because we'll have said in our accounting rules that this first value for the revenue account should be drawn from the transaction type. So let's save that. What is the other thing we want to have at the transaction type? Unbilled receivables and unearned revenue. So for this, the whole combination we want to come from the transaction type. Okay. Now, if maybe you're using different unbilled receivables, okay, for different, let's say, revenue streams, then you can specify a particular natural value account or account, the value for the natural account segment to come from maybe a specific memo line. But in our case, we only have one unbilled receivables and one unearned revenue. So we want the whole thing to come from the transaction type. So we're going to enter the combination here. So unbilled receivable still 001 account. We want to enter the correct one because it will be read from here. So unbilled receivables, and we can default everything else, but even all these other values will still be read from here, and we will see why. The other account we want is the unearned revenue, and for this we also want to have the whole correct combination. So if we go and set up our transaction, our accounting rules, we can therefore go and tell receivables to check the transaction type for any of these accounts and for any segment, depending on what setup we want. So that's what we need to do here at the transaction type. Okay, so we still need to, now what the next step we need to do is we need to change this here from the balancing segment value or the company value for the revenue account. In the accounting rules, we need to change it from coming from the standard memo line to coming from the transaction type. So for that, we need to go to the auto accounting rules window. So this is the navigation. So set up transactions count auto accounting. So let me query what we have under Maskani. So for our receivable, the type here, under the type, you specify what you're creating the rules for. So is it unpaid and earned revenue, unpaid bills receivable, and bill receivable? So we are going to define the rules for these two, and we want to modify the rules for revenue. Yes. So receivable, we want it to stay that way because that's what our setup says. So receivables, we want the whole thing to come from transaction type. Okay. So that's why you're saying here, we want everything to come from transaction type. What about revenue? So revenue right now, every value for every segment is coming from the standard memo line. Okay. Our current setup. But we want the new setup to be such that the balancing segment value is coming from transaction type instead of standard memo line. In that case, we would have to change this from standard lines to transaction type. Before we do that, let's try and create the rules for unbilled receivables. Okay. So remember I told you that in order to avoid unbalanced journals, and we are balancing by the company segment. Oracle will force you to choose the source here for the balancing segment value. For your unbilled receivable or unearned revenue, they have to be the same as those for your revenue. Remember the journal entries that come in every period. So in bill in arrears, you will have every period for revenue recognition, you will have unbilled receivables will be debited and revenue will be credited. So that's a journal. So if the balancing segment values are not the same, then that journal is unbalanced. To avoid that situation, that is why the source for the balancing segment values have to be the same for your revenue account and either unbilled receivables or unearned revenue. Okay. So let's say, for example, we try to enter transaction types here, which is what we want to do. And then we come here. You see, it goes to standard lines because that's what it says under okay, delete instead. So that's what it says, and that's what it says under revenue, standard lines. Okay. So in order to create the accounting rules, auto accounting, don't confuse with accounting rules. In order to set up auto accounting for unbilled receivables, the way we want our setup, we have to change this first. Okay, so we can put this as transaction type, and we specified the revenue account in the transaction type, but receivables will only be interested in what we entered for the company segment, right? And we can leave all the rest this way because that's what we want. We want the rest to come from the standard memo line. Okay. So since I've changed this, I can save. And then now we can try and create the auto accounting rules for unbilled receivables and unearned revenue. So let's start with unbilled receivable. We want this to come from transaction types for everything. Now you see it allows us to do it. So just shift F5 to copy whatever value is in the field above. Now, of course, in our case, our operating unit is serving one legal entity. So we can also say that we want this to be constant, all right, instead of coming from the transaction type. But in the case whereby the operating unit is serving multiple legal entities represented by different balancing segment values in the ledger, then we want to have that ability to choose which legal entity owns that transaction. So that's good for unbilled receivables. Let's create one for unearned revenue. It's going to be the same. So transaction type. So we have set up our auto accounting rule. Now let's circle back and remind ourselves why we are doing this. We are doing this because we don't want to keep going to the distributions window when we enter transactions. We want receivables to default those distributions for us. Since we have just started entering transactions with invoicing rules, we had not set up auto accounting for unbilled receivables and unearned revenues, which come into play when we enter these transactions with invoicing rules. So that's why we went and set up auto accounting, which will tell receivables where to grab the account combinations for those accounts in the case where they apply, in the case where we are using transactions with invoicing rules. And we therefore told our receivables that for the unbilled receivables account, go and grab it at the transaction type. For the unearned revenue, go and grab it at the transaction type. For the revenue, grab the company segment at the transaction type, but grab the rest of the combination from standard memo line. Okay. So now what do we expect? We expect that when we go to enter a transaction, we won't have to go to the distributions window to specify those accounts like we did last time. So let's go and try enter a transaction. So we select a source. For our source, we had specified a default transaction type, and we had also specified the legal entity. Okay. So this is the transaction type that receivables will be looking at. Customer, we only have the single one, Realmat Stores. Now let's use in arrears. We use in advance for the other one. So what do we expect? We expect unbilled receivables to come into play, okay, instead of unearned revenue. We also don't expect to go and enter those accounts, the distributions window. We expect that auto accounting will do that for us. So let's go to the lines. Here, let's select consulting services revenue. Let's say quantity is, choose the same. So, one, we don't expect to go to the distributions window to enter the accounts because auto accounting will do it for us. When we go to the distributions, we should see those accounts already. But what is the other thing that we have done in this session? Remember, we are using a transaction with invoicing rules. A transaction with invoicing rules will have to have accounting rules associated with it. But remember, we attach the accounting rule to this standard memo line. So we expect that we won't have to go to the rules tab to enter the accounting rule, or if we do, we are going to find it populated for us there. So let's go and check. And as you can see, there it is, the 6 months equal. So that's one thing we verified. Excuse me. So what is the other thing that we need to verify? That our distributions will be entered for us, which means if we save this, if we save our work, Oracle won't ask us to go and enter offset accounts. Okay, the offset accounts are those unbilled revenue and unbilled receivables and unearned revenue. So let me save my work. Okay, Joe. So just something about this note: transaction date has been set to 7th August. Why? This is in arrears billing. In arrears billing, your receivables are recognized at the end, at the last period. So the last period, if you say that the start period is March, the duration is 6, will be August. So March, April, May, June, July, August, that's 6 months. So that's why the transaction date has been set to 7th August. And so is the GL date. The GL date will also be set to 7th August. That will be the period when your receivables will be recognized. Okay, this transaction will be accounted for in GL. Okay, so now you see at this point we expect that we get that message to go and enter our distributions, but we're not getting it because if we go there, we expect that the distribution will be entered for us, or the account. Let me not say distribution. This is not a distribution really, because there are no amounts. Once we run revenue recognition, then you will see the distribution, which includes the amounts for each period. So anyway, the accounts are here. Receivables should also be here if you say set for all lines or not. Let me close this, save, and then go to distributions. So yeah, so there is the receivable. Okay. So this whole combination is coming from the transaction type. For revenue, this value here came from transaction type, but the rest of this came from the standard memo line for consulting services. Remember, the transaction type, we actually entered 4,000 in the revenue account, but you can see this is 4020 because that's what we specified at the standard memo line, and that's what Oracle is using. And we can confirm that we go to standard memo line. Consulting services, you can see revenue account is 4020. Okay, of course it says 001 here, but that 001 was not got from here, it was got from the transaction type, which means if we entered a different value here, for example 002, we would still expect to see 001, if of course we are using that same transaction type. So in this session we have learned how to set up auto accounting for the two new accounts, unbilled receivable and unearned revenue. We also talked about the logic behind why you would want auto accounting to draw the values from different sources, such as the transaction type or the standard memo lines. We also saw how to associate accounting rules with standard memo lines, right? Before we end, perhaps I'll just show you what we're talking about when we say the bill to site, where we can also specify accounts for a particular customer. So let's go to customers. Looking for Realmart. So Realmart stores is the customer. Under Realmart stores, we have this account and we have this address. So you can go to this address, select details, okay. If you go to business purposes for this address, you will see that it says it's a bill to location. Okay, if you select details here, you can see that you can enter all these accounts here. So unbilled, receivable, unearned revenue. Okay, so if a transaction belongs to this particular account customer, and you set for your accounting rules, you want some of the values to be drawn from the bill to site, this is what we mean, right? It will come and look at whatever you specified here, and those are the GL accounts that are going to be used. So that's just something I wanted to show. But with that, we can end this session, unless Bob, you have something to add.
All right. Thank you so much, Victor.
Thank you.